2022 started quite strongly for the Australian market, up 2.1%, with the Australian share fund, our main fund, outperforming that, up 2.4%. Overseas markets were generally weaker, as was the Australian market until about the middle of March, where the commodity price rally and the strength of the resources sector, particularly iron ore and energy, has carried the market to a gain for the quarter, while most overseas markets were down. Overseas markets have been affected both by the prospect of higher interest rates, as central banks have to combat inflation. Inflation is now around 8% in the US, a little bit lower in Australia, and also there have been some worries about the Russian invasion of Ukraine, naturally, which everyone would know about. That has pushed up energy prices, as Europe is very dependent on Russian gas, oil and coal, benefiting Australian producers. The strong resource sector did hurt our funds, as we are underweight resources, but we were buoyed by a number of industrial companies, most notably Orica and Tabcorp. Orica benefiting from rising mining volumes and new management, and Tabcorp is to be demerged into the Lottery Corporation as a spin-off, and the remaining Tabcorp, which is the existing wagering business in horse and greyhound and sports betting. Lotteries, we believe, is an outstanding business and has been a core reason for us holding Tabcorp. They've changed prices and game rules and generated a number of jackpots, which has stimulated demand for lotteries, and we expect that to continue into the future. As we look at the outlook, it is a tricky outlook. We have very high house prices, very high household debt. The Reserve Bank is therefore seemingly very reluctant to raise interest rates, even though you've seen interest rates up in New Zealand, the UK, the US, all over. We're still sitting at essentially zero interest rates, with the Reserve Bank unwilling to put a stop to the party that they have created of very easy money pushing up house prices. We've got incredible house price gains, but they will have to push up interest rates at some point, as we have a lot of price pressure in the system. As interest rates go up, mortgages will become more and more expensive, particularly fixed rate mortgages rolling off to variable rates, and we do see pressure on consumer spending and on the economy as a result. In such a tough environment, we think that quality defensive companies will be favored, and that is the way our portfolios are positioned for our investors.